In a development that I am calling Project Plugcorn, Plug Power has decided to issue for $1,000 45 billion share voting rights to their CEO to rig a upcoming shareholder vote to approve a reverse split coming up in July 2025. Let's dig into the details and talk about what is really going on here. Yes, this is completely true news. Plug Power has a upcoming shareholder vote scheduled for July 3rd, 2025 in just a few weeks. And there are several things on the ballot, including a proposal number 2 asking shareholders to increase the authorized amount of shares so that the company can raise some more capital. And if that one doesn't pass, the company has proposal number 3, which would effect a reverse split, which also would give the company a different way to raise capital by collapsing the current share structure. Now, the problem that Plug Power faces is they have over 1 billion shares out there, and they struggle with retail ownership in their stock. And as we know, there is this thing called retail voter apathy. People just don't show up. Plug Power has a very difficult time getting 50% of shareholders to vote. With this very serious issue of voter apathy affecting Plug Power, they had to get creative in coming up with a way to make sure that they could get one of those votes to pass, either proposal 2 to increase the authorized amount of shares, or proposal 3 to effect a reverse split. And to cover their bases on proposal number 3, the company sold 1 share of a newly minted Series F preferred stock, a Series F mirroring preferred stock. 1 share sold to the company's CEO, Andy Marsh, for the sum of $1,000. And the company assigned voting rights to these newly minted Series F preferred shares, which they have the right to do under Delaware law, a thing that we call blank check preferred stock, where companies incorporated in Delaware can assign whatever voting rights they want to preferred stock without your vote. The company assigned 45 billion votes to this 1 share that the CEO purchased for $1,000. And he can only use those 45 billion votes to vote on proposal number 3 in July, the proposal to effect a reverse split. The use of preferred shares to juice the outcome of a reverse split vote became widely known in the news when AMC decided to issue the APE preferred units. But it is certainly not limited just to AMC. Other companies have done the same type of thing. These are what we called super voting preferred stock. Even the NASDAQ in 2022 issued a staff interpretation letter to a biopharmaceutical company giving them permission, saying, yes, this is legal under the exchange rules, as long as you are in compliance with your corporate charter and any state-specific rules regarding voting and reverse splits. In a letter to shareholders on June 6, 2025, Plug Power went through some of the details of this recent corporate action and why they needed to rig the vote. I use that term loosely, juice the vote through the legal offering of a new Series F mirrored preferred shares. They said, as we recapped, the company issued 1, yes, just 1 share of a new Series F preferred stock to its CEO, Andy Marsh, for $1,000. But here's the key, they say, this share comes with an enormous 45 billion votes. I know that might sound shocking to you, right? How can companies issue 1 share and assign 45 billion votes to it? I want you to go research Delaware blank check preferred stock. And if a company is incorporated in Delaware and they have their company charter set up correctly with the standard blank check preferred stock boilerplate, they can do pretty much whatever they want with preferred stock. And you will know that if you go in and read a company's 10K and look for the section where they talk about blank check preferred stock or preferred stock. And you will see that almost every company that's incorporated in Delaware has this ability, and Delaware allows the companies to assign whatever voting powers they want to preferred stock, and the companies can enact that at any time without shareholder vote. That means that as long as everything is properly disclosed, as it was with Plug Power in previous 10Ks, as it was with AMC going back decades, as long as everything is previously disclosed, companies have wide discretion to implement these sort of schemes, and it is 100% legal. And there's really not much you can do about it other than be informed that if you own shares of a company that is incorporated in Delaware and the company is undergoing some liquidity or cash problems, that this is a solution that they might decide to employ. I go on in the next paragraph to say that the catch with these 45 billion votes is they must be vote in proportion to how the common stock shareholders vote. For example, if 50.5% of the holders of common stock vote in favor of the reverse split proposal, then 50.5% of CEO Andy Marsh's Series F preferred stock will be cast in favor of the reverse split in the same ratio. In this way, the preferred stock mirrors the votes of the common stock shareholders. Now, you might be asking yourself, why do they need to go through all of this trouble? Because in 2023, if you recall, Delaware changed their DGCL, the rules that govern corporations, and changed the rules for all companies. And companies don't need 50% of all outstanding shares to show up and vote for something, to vote for a reverse split. They don't need that large amount of shares to show up to approve a reverse split anymore. They only need 50% plus one of the shares that actually show up to vote. So if you have 1 billion shares and 100 million show up to vote, and if half of those plus one approve a reverse split, then you're good to go under the new DGCL rules. So if that is the case, why in 2025 are we looking at Plug Power employing this mirrored super voting preferred Series F stock? In a separate letter to shareholders filed with the SEC on June 2nd, the company went into a little bit of detail explaining why they had to do this. The company affirms in the third paragraph that they are aware of the 2023 changes to the DGCL that only requires now an affirmative vote of the majority of votes cast. However, they have a company-specific problem here, and they say in the fourth paragraph, the company charter, which was adopted at the time of the company's IPO in 1999, unfortunately does not permit Plug Power to use this new DGCL lower stockholder voting requirement. They are locked in by their own charter and cannot use the benefit of this new rule passed by Delaware for all companies incorporated in Delaware. Assuming that the company has 1.1 billion shares of common stock outstanding on the record date, they will need a majority of all outstanding shares, meaning 550 million plus one, to vote in favor to approve proposals 2 and 3. And the problem is they are not getting anywhere close to this amount of retail shareholders showing up to vote in their corporate annual meetings. They go on to say, and as I just explained, for just about any company incorporated in Delaware, their charter does permit them to issue a voting preferred stock from their blank check authority to participate in a vote on reverse stock splits. And we have rulings already from the NASDAQ back in 2022 that this is permissible. NYSE, as far as I know, has been silent on it, but considering that we haven't had any legal challenges to this overturning NASDAQ's or any company's decision to implement this preferred stock to supercharge the voting power of some preferred shares, this is a perfectly legal method for companies to ensure they get enough votes on certain proposals. You might not like it. I get that. but the rules are the rules, and it is incumbent on us as retail investors to understand the laws, the regulations, and the rules as they pertain to the companies that we are investing in, so that we are not caught by surprise by companies doing whatever they have to, whatever they need to ensure that they get votes to go their way to ensure the company's survival. Because if these companies cannot raise cash, they will ultimately end up in Chapter 11 or Chapter 7. A little bit further down in this letter, the company says that their preference would be for shareholders to vote for proposal number 2 to increase the amount of authorized shares greater than 1.1 billion. Apparently, they've exhausted their number of shares that they have issued versus authorized, and they want to increase the number of authorized shares so that they can sell shares and raise some more cash. The company goes on to say that if proposal 2 doesn't pass, though, they might need to rely on proposal number 3, the reverse stock split, and those Series F super voting preferred shares mirroring the common stock. We will wait and see here in a couple weeks which one of these proposals gets approved. One other thing that the company notes is that one of the biggest challenges they face is roughly 40% of the company shares are currently out on loan, which means if your shares have been loaned out, you don't have the voting rights. And they're asking shareholders to please consider recalling your shares, check with your broker, make sure that your shares aren't loaned out so that you have the right to vote. I get it that it might make some of you guys angry when companies like AMC or Plug Power do things like this to, the words you use, rig a vote. However, they are operating within the legal constraints of the exchanges, the state they're incorporated in, and their company's charter. And all of these blank check preferred stock provisions are always carefully laid out in the 10K risk factors. Make sure, as you guys are probably tired of me saying, whenever you get a 10K or a 10Q, read through and make sure you understand all of the risk factors in a company that you're investing in, speculating in the case of Plug Power. If a company is losing money and burning cash, you are speculating on a future turnaround. You're not investing. If you want to avoid these problems entirely, pick companies which are profitable, which have a long history of growing revenues and growing profits, and you won't have to be dealing with these sort of legal shenanigans. Hey, I like to speculate on these company stocks, but I don't hide from the risks that are out there. You guys are probably tired of me talking about risks, but understanding the risk is important for you to help size any position that you take on in these speculative investments and then manage your risk. I want to hear your thoughts about Plug Power's recent decision to sell 45 billion votes to the CEO for $1,000. Let me know down in the comments what you think. Do you think that this should be legal? Do you understand that it is legal under the framework we have right now? What do you think? Thank you for watching. I am Tony Denaro, and I will see you on the next video.